welcome out to the halftime report, or I guess this is the No Justice show.
So this is the No Justice halftime report. At long last, we have returned.
We did it again. We told you guys we'd come back. They fought us. No, but
They did.
I don't think we're allowed to call it No Justice. I did get a little bit of a butt chewing for that one.
But that depends on how you define we. I'll call it No Justice.
Oh, okay. There you go. Oh, it was just a fun play on words. It's not. I didn't name their last name, but. Well, anyways, Frank, welcome out, guys. This is Coach Cody, Coach Frank, and Coach Noah's on his way as well.
Sweet.
He said he was just running a little bit behind this morning.
Fashionably late this Friday.
Fashionably late, but you know what? That's okay because we always love to hear what Noah has to say. So I'll give him the break.
Oh, of course. And welcome out, Team Tackle. Great to see you guys as always.
So you and I were talking to pre-production. You know, not much headlines, but yet, I mean, are you buying that break?
If it closes, yeah. If it closes, and I don't want it to break on Fridays generally, but if we close, if we knock on the door or just a hair above on Friday, I need the confirmation Monday anyway. So why not Friday? So as long as it doesn't continue to run, it's been running a little bit, and it's just the U.S. and China make progress toward finalizing some trade stuff. A report. I don't see that it's official.
This was
so it feels like
or something between top two that they said, you know what? Yeah, we can get something done. It's like, well,
yeah, and so maybe not. Will they? Won't they? Right, as we continue that storyline. But today we believe in, more importantly, technically, that's what we want to see. It's felt like we've had lots of time now at resistance in the broad markets. We've had lots of opportunities for real profit taking to come in. Almost 2 weeks now pushing resistance. It's really felt, and again, nothing's happened yet, at least on our S&P here. It's felt like it wanted to break. Earnings have come in pretty decent. If you look, and you don't have to do this, but there's still lots of earnings to report, next week, big name. So
absolutely,
we're still in it for sure. But we're definitely seeing more greens than reds when you look at earning days performance by a significant margin.
On that note, that's actually a good point. Let me bring up trading.com. When you go to the market skyline through the trade center, and you have the heat map. One of the coolest features I like to use around earnings is to switch this from 1 day performance to earnings date.
There you go. Actually, it's earnings day performance. Well, this one works too.
Second to actually.
Okay, I see what you're doing.
Change. Well, if my computer wants to do it.
the wonders of being live.
I don't think it does, right? And I think this might have frozen.
I think. Well, you are. Yep, you are frozen in time. Somebody take a quick picture of Cody. We need a picture of Cody's face right there.
All right. So anyways, you do that, then. What it'll do, let me refresh this or log out, log back in and see what's going on with my tackle trading.
While you do that, welcome out, Wendy. This is Wendy's first time joining us here.
There we go.
Great to have you. Welcome to the team, and hello, everybody. Hope everyone's had a great week. There we go. I hope somebody got a picture of your frozen face, Cody. If you did, please send it to me on Twitter. I'll do the rest.
Oh, okay, perfect. No, but I really like this because now I can look at it and see, how far are we through earnings season? As earnings season is out there, so simply blue or pink.
Right.
And as things get more, as they start passing, they have their earnings. This is going to start shifting into more of a dark blue color versus being a pink color. And then right towards the very end of earnings season, you start seeing the maroon start back up to where the next one's already on its way.
Yeah, it's not too far. Will you try to go from earnings date to earnings date performance there, Cody?
Oh, I like that one as well.
So we can see
earnings date to earnings day performance. Again, really cool feature here where you can see how each of the earnings have done. So you can base, how's the market doing? How are all these companies doing based on their earnings? Is that, I assume, what you were going to get at?
Exactly. We're seeing a lot of green, which means the day of earnings, their response was positive, right? Whether, we'd have to dig deeper to see if it was a good report or a bad report or whatever. But the reaction is what I care about, from a short-term perspective in particular. A lot more greens than reds. It's been pretty good. There's been some rough ones. TXN, really, really crushed. Crushed to the downside. IBM really down big, but so much green. We've seen a lot of strength, at least in the response to our earnings thus far. Still lots of to be determines there, right? And a lot of them are going to be determined next week. There's over 150, I believe, S&P companies reporting next week, including Google, Facebook, Apple, Exxon, MasterCard, AT&T, Chevron, Pfizer. I mean, we got some huge names next week.
Yeah, so many are coming out. And guys, this tool here, I can play with this thing for a couple hours, because when you actually start getting into it and you see, okay, like relative volume, okay, what's most of the market kind of looking at today? Where's the stupid ads? we borrow this from what's the page?
It's Finviz. It's the Finviz.
This is from Finviz. So those are Finviz ads that keep popping up on Tackle Trading. We don't have ads that pop up like that. But stupid Finviz ads off of the heat map.
It's the price for using the tool for free, my friend.
That's exactly what it is. But anyways, guys, get over there and check this tool out, because it can give you a lot of data, and you can see where, relative volume, who's trading what, and where is most of the volume movement today and things. Amazon, just had its earnings, and then of course it's been all over the Bloomberg and CNBC, and Kramer's talking about, buy it. And I'm sitting here just thinking, like, are you really telling people to catch a falling knife?
Well, take a look at its chart, if you would. Amazon had an interesting day, an interesting response. We had a big gap down on earnings into a bit of a support zone. And basically, I guess folks listened. So
yeah, they started buying. They started buying that. It was gap down, and it just
and it's been it's tapered off the last hour or so, but the first 2 hours, and hey, there's Coach Noah, fashionably late, and of course fashionable as always.
Fashionably late and fashionable as well.
Actually,
if you liked Amazon at 1,800, you're gonna love it at 1,700. That's what it said.
Exactly. It was an impressive bounce. Definitely something worth keeping an eye on, in my mind, at least. Like today, probably not, but it's, for me, I don't know about you, Noah, but it's the response, especially when I've got my trader's hat on. It's the response to the earnings, not necessarily what my opinion of the earnings were.
Yeah, that goes along that whole lines of like trade what you see, not what you believe. Like, I don't know how the market's going to respond to the news. Like, I looked at it, I'm like, oh, they missed earnings. Sell, sell, sell. But that's what I say in my head. But when people step up and buy, you have to play the reaction. It's not the news, it's the reaction to the news. That's true for everything. So watch what the traders do. That one filled the gap like a champ. And I don't think I'm not the one who's going to step up and short sell it.
Nope. But we do have a clear support zone, and we've tested it again. If this is a little bit of over optimism, that support will give out and give us a pretty decent bearish signal. But I think we're looking at needing to break that before we get too crazy.
Well, guys, Noah, I asked Frank, and I gotta ask you the same question. You buying that?
Buying Amazon?
Nope, buying the break in the market right now. Are you buying that?
Hold on. Let me look at it. I was off getting breakfast with my birthday boy today.
It's birthday this morning. Happy birthday!
Yeah, it's my 3-year-old's. It's my son's 3rd birthday.
Oh, happy birthday!
Chocolate donut for breakfast. That was his choice. Who was I to say no?
A wise man. You're raising him right.
So I also had a chocolate donut for breakfast. So I'm all sugared up, and I'm excited about this breakout. You know what? You go first, Cody.
I'm not buying this breakout.
No, I'm not. I will buy into the breakout once I see it close above that and start to clear. I think we are going to break out. It might be a foregone conclusion, but it's just right up there testing, and I'm not buying it today, but give me a close or two above that next week, and I'll find good bullish candidates.
There you go. And that's really what I was looking at is I'm not necessarily buying, the ETF or anything of that sort, but I can find some really good candidates with this breakout, and it could get me to shift a lot more bullishly my sentiment at the market. but I definitely want to see this continue. But from what it did intraday, the line that I am looking at is actually 330.30. But look at that movement. That's a lot of movement just today. It just triggered and started running, and its break on the hourly chart. If you took the more aggressive one was here, if you took the more conservative one was there, and at both points when they broke, you see the volume flood in.
We any closer on the NASDAQ or any years? I know you guys have already done the broad market, but yeah, the NASDAQ.
Actually, we haven't. You expect too much from us, Noah.
Well, if you look at it on,
I will let you take that for us. Noah, please run us through the markets.
Well, get me back to a daily time frame there on that NASDAQ.
All righty.
That's 5 minutes still? 15 minutes?
No, this is
there we go. All right, there we go.
Are you watching YouTube? You're behind.
So you're on the Dow.
Yeah, you're on the Dow. See how
Dow is lagging. Dow's lagging a little bit.
There we go. Now the NASDAQ.
And NASDAQ, I think, is the strongest of the bunch. So, and tech's usually really strong in the fourth quarter anyway. So I can see the tech leading the charge there. NASDAQ's heavy in tech. S&P's got some tech, but it's also heavy in energy, which holds it down a bit. And then the Dow's been weighed down a little bit. Russell's showing some signs of life too. So
the Russell, I'm liking this little high base.
Well, I don't want to make the people who have those condors on their sweat too much as it approaches that resistance zone. But this would be, this is the kind of time where, like, if you've got the condors and you start to see it moving here, this might be the time you start hedging a little bit before it gets right up to your strike prices and you're making, you're hoping and praying that it doesn't break out on those condors. So hedge early, hedge small, add to it. But beautiful, beautiful chart. Still pretty neutral overall. But I think the NASDAQ's the strongest of the bunch. Without a doubt. Without a doubt.
Yeah, I think you're right. And we're seeing a ton of nice movement in semiconductors. You had, the semiconductor ETF's been cooking. Intel, big pop breaking through resistance here today as earnings come through. So and I don't know about I think I probably do.
Yeah.
When semis are cooking, you usually know what that means, right?
It does. Well, pop in SMH, Cody. Type in that's the semiconductor holders ETF, and that gives you a good look at what's popping there. So you got a nice little bit of energy in there. I agree with that. So that's going to press your tech, and I think that's definitely going to help the NASDAQ. And signs of strength there. I like it. I like it a lot.
Well, let's keep working through. Now, we were noticing we're at a weird point. The market's up, the dollar's up, oil's up, just barely, a little doji on oil. Gold's up, and silver's up. What's going on, Noah?
I don't know what it is, but you're clearly winning across the board. This would be a good weekend to bet on all of your favorite sports teams while you're at it.
Oh.
I'm a Bronco fan. That is bad advice.
True.
That is bad advice. What's it called? I've placed one sports bet in my life and got it wrong. But what's it called where you low probability, where you say, like, you know what, all these teams are going to win. So
that's a parlay. That's a parlay, my friend.
So I guess we're parlaying with the markets right now then, because everything's up.
Parlays pay out big.
I guess so.
Well, it's because they know it's Friday Fun Day, right?
It's Friday Frank Day. It's Friday Frank Day Fun Day.
It is.
It's finally Fun Day Frank Day Friday.
You can hear it in his voice that sugar is giving him a boost this morning.
No, it really is, for sure. Like, I don't normally have that kind of sugar ever. I'm bouncing off the walls here. This is fantastic. You should take advantage of it.
Well, what we're seeing on the dollar is I think it's bounced right off that 200-day moving average. I think I was leaning that this was a little bit overextended to the downside, and we had to give it the strength of the downward movement, but now it's starting to recover a little bit.
Yeah, I remember that conversation we had about the dollar last Friday where we were talking about just how hard it was hit, like just down, all that momentum to the downside. It made you not really have a lot of confidence in a rally, but from a statistical standpoint, yeah, it's a small revision to the mean. Bit of a dead cat bounce there. And yeah, I didn't buy into it myself, but that's the bottom of the channel if you look at it.
Yeah. And that's exactly what I switched to the weekly, because you see that channel a little bit easier on the weekly chart. where it's been consistently, drop, fade up, drop, fade up, drop, fade up, drop. Pattern continues until it doesn't. I'm expecting a fade to the upside. I think the dollar still wants to hit 100, and I'm literally saying this after it just had this big down week, and that's all based on the weekly. Now this is a weekly, so this could take 3 months to half a year for it to start continuing.
Yeah. Do you think our pending rate cuts are already priced in?
I do indeed. I think they're priced in. This is happening, but also, so with yesterday, Mario Draghi gave his last speech as the head of the ECB, the European Central Bank. He stepped down, and I was reading a really interesting article that was talking about how even though he stepped down, the incoming ECB chair is kind of got her hands tied, and I forget her name. I'll get
Christine
to know her
Lagarde. She's the heir apparent. Yes.
Thank you, Noah. Is that she's already got her hands tied because basically the negative interest rates that he priced in the plan of continuing just to add stimulus, there's almost no way that she can pull that back initially. So it looks like the ECB is going to have to either continue to stimulate and continue to go negative rates, which would actually, in my opinion, I'm really hawkish on this, and I don't think negative rates are the best thing, is that I could see that adding more weakness and instability, not stability, that they're expecting from the stimulus. So with all that being said, I still think the dollar is the least ugly of the bunch. So yes, I think that it'll continue to rise. And these are all fundamentals. This is not, so for those of you who took Forex 101, by the way, 2 students have already completed it. That's really cool, really happy.
Nice.
That's where we talked about the position trading of currencies, is that you can position trade something just like you can any other company where you believe in the fundamentals. And that's what I'm talking about here. I still see the dollars fundamentally strong for the next year. If this were to break this pattern entirely,
I'd probably rephrase that. I see it as fundamentally less weak.
Yeah, there you go.
That's a good way to put it.
No, and that is actually true, because we've made the joke it's the least ugly of the bunch, and that's absolutely true. So no, explain that.
Yeah, well, it's fundamentally the least weak. We actually have a little bit of interest still. We haven't cut our rates all the way to zero or negative yet, and I think that's the big key. Is yet I think everybody's kind of racing to zero on that, and again, some of them are already heading to into the negative territory, and it just everybody's trying to stimulate their economies by cheapening their dollar, and it is long run not good. Short term, it prevents the bubbles from popping. So, but eventually it'll catch up with it. So the fact that we still have what's the rate cut going to put us at? What are the odds on the rate cut on the 30th?
Let's see. Let me pull up the good old CME. Let's see what we have here. We are at a 93% chance of a rate cut.
93% chance of having our interest rate somewhere between 1.5 and 1.75 basis points.
Yep.
So yeah, that would make us still the top dog as far as interest rate on currency goes. If you go to Forex Factory's homepage and look at the current bank rates and just kind of put it into perspective, like on their, I believe it's on their calendar page where they have the bank rates.
Let's see the calendar page.
Yeah, and then down on the bottom left, if you scroll down, there it is, bottom left.
Go.
So the U.S. is showing less than 2%. We'll probably be dropping down to 1.75 to 1.50. Next to us, behind the U.S. is Canada. Then New Zealand's still paying 1%. Australia has dropped down to 0.75, and the GBP is at 0.75. The euro and below are 0 to negative.
Yep.
So we, if you were a multinational corporation, which currency do you want to hold? Which currency is going to give you that? If you go watch the Forex 101, you're going to learn all about the carry trade and those who receive the interest rate swap. So if you were to trade the US dollar versus the euro, you're on the receiving end of one, right now, 2% interest, basically. Yep. 1.75 to 2% interest. After the 30th, it'll be, 1.5 to 1.75%, but that's annually. And so you can actually be on the receiving end. And to put that into perspective, like you could hold, This is kind of a cool trade for folks. And again, you have to look at the chart of the euro dollar. Bring up a chart of the euro dollar.
Give me a second. There it is. Euro
So
dollar cross pair.
right now, if you were to short the euro, that means you'd hold the dollar and shorting the euro. And if you took one standard lot, it would require 2% margin. So you could hold $100,000 for 2%, which means $2,000, right?
Mm-hmm.
Okay. If you were collecting 1.75% interest over the course of a year, what's 1.75 interest on $100,000? 1,700 bucks, right? So you could hold a $2,000 position that could make $1,700 in interest.
It's a beautiful trade. And the thing that I love about it, because the carry trade is awesome, and you typically want to try to grab it atop the range, which is another thing that could be looking at fundamentally. If we think this trend is going to continue over the next year, picking it up here for a carry trade would be a good opportunity. But you
do have market risk. Like if the euro rally against the dollar, that's the risk to it. But you collect the interest no matter what. So a lot of folks will just hold on to the money and use some of that leverage. And it's kind of cool. Like for just 2%, you can hedge the value of your currency. You know, for 2% of your portfolio, you could hedge your portfolio against currency risk. That's called the carry trade, Jimbo. The risk is that the euro rallies against the dollar and you lose principal on
you lose more directionally than you do.
Just like losing on a covered call, for example. If you owned the stock.
This is a way to theta trade currencies, but there's always a directional risk even with theta trades. This is the same thing.
Same thing. You got directional risk. If this chart were to run up, that would be the euro gaining against the dollar, and so you'd be losing purchasing power on your dollar. So that's where the drawdown comes in. And you have high leverage on that. You're using 50-to-1 leverage or 2% margin, and that's a lot of leverage. It's the most leverage out of all foreign currencies. You need $2,000 to hold $100,000. One lot. That's a standard lot. It depends on the broker. Every broker is a little bit different, but even in Thinkorswim holds about 2.5%. But your typical Forex broker is just going to hold 2%.
And what's really cool about the carry trade, and it's probably my favorite thing about it. So in options trading, when you trade your theta and they, they give you the credit, but then they're holding that buying power effect. In the Forex trades, you're seeing them deposit money into your account every day.
Every day, every day
they're depositing money in your account, and you're just seeing this money just trickle in. And like, that's got to be the coolest feeling ever, is that it's like every day I'm saying, financing adjustment plus, X number of dollars. And it's just like, yes, I'm liking this. And it's about, about 10 a.m. my time. So I think it's right around 4 p.m. Eastern Standard Time that goes through. Maybe it's 5 o'clock, right when the banks close on the East Coast, that they deposit that money. But that's the coolest feeling, is daily seeing a deposit into your account. Now, all of this before we go too deep down in the rabbit hole, because I can talk Forex all day long. If you're interested in the things that we were just talking about and trying to figure out what this is, then you need to get over and take the Forex 101 course. Like I said, there's 2 students who have already completed it, which I think is crazy fast. It's been out a week now. And we have 2 students that have completed the course. So kudos to them. And we have another 50 or so that have started the course. Guys, get over there if you're interested. Jimbo, you're asking a lot of questions, so I can tell you're interested, but go over there and take that course. With that, I'm going to revert back.
I was gonna bet that Jimbo was one of the people who had finished the course already. I was just guessing, unless Jimbo's just a big talker.
Well, listen, we all know that Jimbo. Have you met Jimbo? He's a big talker, no matter what else he is.
He's one of my new favorite people of all time.
Oh, I love Jimbo. Absolutely.
So the
only reason I would bet against that is I've seen the names, so I know the 2 that have completed. But also he's asking questions that I believe were covered in module 2. So it's like that's a pretty close one. That the carry trade I think was covered in module 2.
Well, and that's, it's actually good stuff. So to get in there and do that. And again, you have access to that. All pro members have access to that. And if you're not a pro member yet, you got your 15-day free trial you can take advantage of. We always have that standing offer. So get on over there and join us. Boy, I'll tell you what.
With that,
maybe I am going to buy into this breakout.
Lots of things are moving. So many things. I got a jump start on my watch list for next week last night while I was watching that boring football game. And so many things that were in my watch list yesterday, like, well, they're going to need new development because they just took off with the market here today. A lot of strength.
I agree with that. Absolutely.
All right. Well, let's look at oil. What are you guys seeing with oil? Like I said, it is up, but just barely. Just a little doji here above the 50-day moving average, still below the 200. Anything?
Well, the naked put havers are probably very happy right now. And it's pretty neutral, I think, from a technical perspective. Like, you do have a nice little rally, but you're still very much range bound in between that kind of 58 and 52 threshold.
Yeah.
And not a lot of momentum in it today. But again, I don't expect major drops. I don't expect strength out of oil this time of year, but I don't necessarily expect weakness either. So again, if you've been selling those naked puts, you're probably pretty happy on that. Again, way out of the money, low delta. And for directional traders, probably not so much going on here.
Very well. Moving on to gold real quick. Let's just finish up with the metals.
Gold put in a little pop yesterday, gave the ground back up. But from a weekly perspective, if you back this out to a weekly, I really like this gold chart. I think it's a kind of a textbook bull flag pattern. And again, with all the currencies out there, eventually they're racing to the zero on those interest rates. I think that gold's going to be something that you don't mind holding. And again, at 1,500, a lot of folks might wait for a discount, but worst case scenario, you own gold long term. And I think it's got no place to go but up over time.
It's been a nice little stretch for commodities because it seems like the Groundhog Day movie all over again. Like for 4 weeks in a row, it's been basically the exact same conversation every time you look at them. And that's lovely for cash flow traders, at least.
Oh, absolutely. Absolutely. So gold looking good. Yeah.
Friday, Frank Day. Frank, what are you looking at?
Oh, boy. Well, I've got a few interesting things. One thing that immediately pops to my mind is Microsoft.
All right. A little
Microsoft come in. Nice little earnings beat here yesterday. Most of our team is probably familiar with Microsoft. We've really been sideways for a quarter now, just creeping along, but not going anywhere. Now we've got an earnings beat behind. I'm sorry. No, go ahead.
Oh, I've been waiting for this to break out for like a month and a half, 2 months. I'm like, come on, you can do it.
I was so happy with how it moved yesterday. Oh, because of course I've been watching for it to break out there. And of course, I'm hoping it doesn't break above resistance or, something along those lines.
How long ago did they announce their buyback? It's been 2 months. I've been watching this. Yeah, about a month and a half, 2 months. And so I think with that buyback news, it's a no-brainer, but it just hasn't been able to break that 142 zone yet. And every time it gets up there, it's had a little bit of a dip. So I've been, writing covered calls on that and then owning the stock and some longer term options on it.
Been great environment to do that. I love the setup that we have here. We still have some things that need to happen, but Microsoft breaks. We know it had at least a positive response to earnings, a pretty decent report in my opinion. It potentially and ideally, so is the NASDAQ breaking out at the same time. So is the S&P. So there could be a really interesting breakout candidate in my mind, at least as we go into next week. Probably my favorite breakout candidate going into the week.
How were their earnings there?
They were good. Basically, I mean, headline-y, I guess to put it in headline terms, this quote says it best. Microsoft rallies as results beat virtually every metric. It was a good report.
Good report. So I would expect a breakout. This would be a good time to uncover.
Absolutely.
If you have covered calls, if you're catching that breakout, you can always add a covered call back on. But if you think it's going to break out, uncover, put a buy stop on those covered calls, so that if it breaks out, you get the capital gain, and you wait for it to run. Then you wait for the sell signal and then recover.
Exactly. That's a pretty chart. If you want the other side, E-Trade, Cody and I were looking at that one. Brought that one up.
I'm gonna keep an eye on this one.
This whole sector looks interesting, by the way.
So, Frank, I'll let you take this one because you're the one who brought it up to me because it makes me excited.
Okay, so we all know the backdrop of the brokers. We've had a great rally with the strength of the market and particularly the strength of the sector. We've come through earnings. As you can see here on this daily chart, we're banging our head into that 50-period moving average. Nothing to see just yet, but we have to go into a weekly chart here to really get the whole picture, I think. And again, we need to, I was telling Cody, I think we need some development. So I think this is one of those that's maybe mid next week and not Monday morning, for me at least. But we're banging right into that 200 weekly moving average. Price-wise, it makes a lot of sense. It would make sense to me, at least, that this is where we drop. You can see we're testing that old support zone as well as that 200 weekly. We haven't seen the right price movement. If you go in and zoom it into, say, an intraday chart, like an hourly or something, we're not going to see the weakness has developed, at least as of just yet. We need to see, at least I need to see that happen before we're talking. But I would expect that there's at least a reasonable chance that that can develop going into next week, presenting us a really interesting opportunity to the downside. So certainly something I'll have on my bear radar.
Oh, I'm right there with you.
We need a better term for bear radar, like bear-dar. Bear-dar.
There we go. We have it, bear-dar.
So that's definitely just a few other quicks worth maybe taking a peek at. You've got Jacobs Engineering, JEC. I think they were in the report last week, if I'm not mistaken. I know they were in my report. Been trying to break out all week long. Haven't been able to do it. But again, maybe if we can break out along with the market, that's always ideal as a breakout trader. The market's breaking with you. Right. So there was an interesting one. You've got a little pullback maybe developing on Dollar General. Don't love the action that we've seen the last 2 days, but again, the price is right. The action is wrong. DG, too many dollar stores. So you can kind of see we broke out, have pulled back, testing that old resistance, hanging around at that 20-period moving average. Little odd that no one wants to buy it on a day when basically just buy stuff, right? So again, I'm gonna have to, maybe we need a little more development there, and that's what I'm always looking for.
I like the setup. Like you got the breakout, the pullback into it. So if you miss the pop, wait for the drop. You need a buy signal here, but
exactly, and
that's the context is right.
That's how I tend to build my watch list. It's kind of, hey, these are the prices that make sense. If I see development, if I see a break, or if I see, some signals on the intraday or whatever it is I'm looking for, I don't necessarily build out especially for, a week ahead of time. How can you? I guess 100%. So I'm always kind of looking, hey, this price makes sense. If I see some action here, now I need to wait for the signals. Another interesting one's eBay. They tanked on earnings and right into a pretty big support level, as you can kind of see, right into support, hanging around there again. Development probably is the name of the game here. Build a little, hang out on that floor before a break, or I could even see the argument, I wouldn't make it, but I'm not much of a buy on support type of guy in this scenario. I mean, if someone did buy, I guess that would make sense. I wouldn't sell it right here, but that's an interesting price in my mind on eBay.
Well, here's a question for you. I like this setup, and it's very similar to one I'm seeing on Twitter. Mm-hmm. Check out Twitter. Do you sell the naked puts on that? Do you dare? Twitter got beat. I mean, it got beat hard. eBay is I think a prettier setup in general.
Yeah, I would agree. If I were looking to go naked puts, I think if we take away our opinion of the earnings report, which we'd have to dig in and see if it scared us enough to not want to do naked puts, but assuming, I think eBay would be more comfortable for me at least.
Yeah, I agree with that. I think eBay's got a stronger technical setup, but boy, Twitter just getting beat down like that, I thought might have been a good opportunity for naked puts. So I was watching that, looking for the slowdown. I think eBay's a prettier setup. What's that?
So let's see what we can get for either one of them. Let's see how deep out of the money we can get for selling a 20 delta. We can get $20 on eBay at 33.5, which is, let me zoom in here. Down there, it's not terribly far. $20, and then let's see what we can get on Twitter. Looking at add simulated trade, 28 days out on a close 20 delta. We can get $30 on Twitter at 28, which is right at that next support level.
Yeah, I mean, they're both in big support zones. They both got beat down on earnings. I think that this is where I tend to look at that as an overreaction by the market.
I think that's fair. What kind of signals would you be looking for, and if you were to decide to do that later this afternoon? I mean, would it be close enough, or?
I usually just wait for the signal, like the doji signal. And I when I'm fading, I call it fading the market. And this is possibly a bad habit of mine, or maybe just I rely on some of my experience to do this. I would take eBay right now. Like eBay's already got the buy signal. It hasn't given you, it's not confirmation for like a directional trader, but it's enough for a, hey, it's slowing down. It's at support. Sell the out of the money put. Then if it breaks, I'll make an adjustment. If it breaks down, I make an adjustment. But I'm kind of banking on the fact that support zone is going to hold with a contingency plan that's not just a stop loss.
Well, the reason that works and you're able to do that is because you're using a theta strategy based on directional technicals. Because if this thing were just to base sideways and never actually give us a break against you or with you to trade directionally, well, that time decay that you're going to pick up is why that you can actually fade that market. So it's actually not a terrible thing to do. You just have to realize that we're not jumping the gun directionally.
Well, for a naked put, it's not a directional play again, and I'm trying to take advantage. And one of the reasons I do it before it rallies is that the drop in price inflated all of the puts premiums, and it's dropping down, and it hasn't reversed and run back up yet. So all the puts are still, for the most part, inflated. The volatility's dropped, but it hasn't dropped as much on those puts because it dropped to the downside. So you still see some inflated put options. And again, you can go out with a low delta. I usually go down to like deltas of 15 or so. And
I'm looking at this and actually going 21 days out versus 28 days out. I'm guessing just because it's the weeklies and the volumes that are on that, is you can actually get a better premium at around 20 delta.
Yep,
about
exactly.
$25. So you can get an extra $5 in shorter time frame, meaning that the decay is going to happen quicker. That's
not a bad move. So that's one of my favorite. Like, you catch a stock that's oversold like that, that's had a big knee-jerk reaction that otherwise you think is a reasonable company that's going to recover. I mean, you only do it on a stock you don't mind owning.
As I was going to ask you next is, for eBay or Twitter, would either of you mind owning and boomeranging either of those?
I don't mind owning either. I think eBay I think is a prettier setup in general, but I'm quite fond of the Twitter.
You don't say.
Well, it's mostly entertainment value, right?
It is good. It is good entertainment.
It is
value.
It's a huge waste of time. But the general,
huge waste of time.
But the general idea, technically set up, I like eBay. But again, the idea is you don't mind owning it. I think I like eBay because they also pay a dividend.
Yeah, I think
Twitter does not.
And I think, Cody, it's worth repeating. When you do these naked puts, it's so much easier if you mean it when you say, I'm willing to take ownership. We need to mean it when we say it. It's easy to say, oh yeah, I would, and we've all probably done it. I wouldn't mind owning it. And then, it starts, I didn't mean that. So it's always easy.
It starts moving against you. You're like, no, get out. I'll take the loss. Wait.
Exactly. Yeah, exactly. It is, it's an easy mistake really to make, because why wouldn't I want to own eBay? They pay a dividend and pretty stable company and and so just mean it when you say it. And if that's not comfortable, that's why we have credit spreads, right? That's just a one step beyond. So nothing wrong with looking at it from that point of view either, if that would be more comfortable, fit better within our, with our rules and systems.
Exactly.
Absolutely.
I just got a couple more. We got to look at Costco.
I was looking at Costco this morning. This is interesting.
It's prettier today. I liked it last week. I like it even more today.
I got
that fib telling me to keep an eye on 320.
Drawing up lines on your chart, Cody.
Exactly. One of those is a winner. So here's,
as you can see when I drew this though, is I drew this, connecting these points here, and that's still working up there. And I love it when I draw something old and then it works into the future. So. But
Mark was very impressed with you a couple weeks ago in the scouting report meeting. Your magic lines were there, and his eyes lit up.
It was like, you're making me more interested in fibs now.
It was weird to see Mark being nice to Cody. That's just not that's not normal.
You mean it was weird to see Mark being nice?
It Well, yes, that is true. But for some reason, he really likes to be mean. He really likes to be mean to Cody. So I got a question for you on this Costco here. This is potentially a little pullback that we could buy into, right? I think, you could make a case on that end. It's also potentially, and we got to think ahead here, a cup and handle if we rally into that resistance.
That's what I was going to say.
So that's a good sign. When you're a trader, you can see the pattern forming in advance. Like you anticipate, oh, this could become a cup and handle. That tells me when your chart pattern recognition skills are where they should be. And I'm not complimenting you, Frank. I'm making that as an observation. I know you're a chart pattern.
Of course not. Noah's always mean to me, right?
Yeah, no, I'm not being mean. I'm just saying, I wasn't saying, oh yeah, you're finally there, Frank. You finally learned how to read a chart.
Hey, I'll take it. I'll take it.
You finally made it after a decade of trading. You finally made it, Frank.
I will take
finally can see the cup and handle forming.
I will take any compliments, no matter how backhanded they may be. Send them my way. I'll take them.
Absolutely. So the idea of seeing the pattern forming, it helps you anticipate and you're thinking ahead. That's one of the things as a technical trader, you're always on the hard right edge of the chart. When new traders are coming out, they spot patterns pretty well in the middle of the chart, in the history of the chart, because they've already completely formed.
Yes.
You want to be on that hard right edge of the chart. And again, that's where you're watching patterns and you're anticipating and you're visualizing the formation of the pattern. Okay. If it goes up, that's a cup and handle. Okay, if it goes down, ooh, that's a double top.
Yep.
So it changes its perspective as of right now. But I love that little setup on the moving averages. It's got that little support resistance zone. It's got a couple green candles. And this is one I put on the scouting report last week. This was my pick. Or I'm taking credit for it anyway, even though it dropped. Even though it dropped, I still love the trade setup in general. And I think the context is right. I think the time is, year is right. If the market gives us a breakout, it's right. This has got good upside potential, and it could be a good candidate for somebody to sell, out of the money options for a credit spread, like a cash flow strategy. You could also trade this directionally, and they do pay a dividend.
Yeah, that's not a bad look. So do you think we could maybe scale in, maybe take a third of our position off of this little pullback, look to move
One of my favorite things to do is to buy on the formation of the handle. So if you get confirmation off of probably Monday, you can start buying in early, scaling in. And then if you get a break above the resistance, you add on to the trade.
So for your scaling, are you looking, let me go down to an hourly. You looking to play it aggressively here?
Yeah. See that little double bottom forming down there? You got a buy signal above 298.
All right.
Yep. So trigger above 298. I'll go ahead and put this on the scouting report watch list right now.
There you go.
There you go.
He's saying I'm claiming this.
Yeah.
That's all right. He's going to claim it anyway.
There you go.
Little sneak peek of what we do in the scouting report meeting, guys. So all of our pro members out there that see the reports, this is what we do is we'll have these charts and we'll run through what each of the coaches are seeing. And then we go through and say, I like this pattern. I don't like this pattern. And then once we all agree which ones we like, we go through and say, okay, where's your entry? Where's your stop? Where are you targeting? So we just said, for this one, if we're going to put on scouting report meeting, that we could have the entry right there, right above 198 entry. Okay, so where we put the stop? I can look at this pretty quickly and say the stop's probably going to be below 294. Do you guys agree with that?
Yeah.
294 stop. Works. And then Frank and I would then figure out where our targets are. So we can say, okay, we could target right the next resistance, quick pop out, but does that give us risk to reward issues? I believe it probably would. And I know already, and I showed my hand a little bit when I opened the video, that a fib fits to 320. So I like that as a potential target. And before we get there, I believe I put one about 312. So now we have stop, entry, target. We've done our set method. The only thing that's left is the P, which is position size. Just because you see the pattern and you know where you're entering and all that stuff, we don't over leverage because it'll bite you in the rear. And that's not the word I want to use.
No, but it will absolutely work. So yeah, great work there. One more for Noah to take credit, and then I'll let you get back to work. And that's AFLAC, AFL.
AFLAC.
There you go. It was a pretty close impression there too.
Try. Did y'all see the news commercial with God, I can't think right now. Saban.
Oh, I did see that.
Oh, I have seen that.
And he's like sitting in the living room and he's like, I think you're perfect for AFLAC. And it
got
looks
his
like
5 or 6 rings.
And all of his rings have the AFLAC symbols on it. Anyways, I
It's
digress.
pretty good. I like it. Well, I love college football. So that's fun. Roll Tide. There you go. If you're out there, Blake, Roll Tide. That's just for you.
Or Adam. Where's Adam Stewart at?
All right. So nice little breakout. I love this pattern. This is a good looking pattern.
It's nice to
Pretty,
be post. It's
pretty cup and handle, ascending triangle. Call it what you want. That's a breakout. It's breakout.
Yeah, nice little things, and nice that it's got earnings behind it. And I was telling Cody when we were talking before the show, this is the toughest week to put together a watch list for next week of the quarter, in my opinion. We've got a lot of companies that have come out with earnings, and so they've really their charts need time to settle, but we still have a ton that are yet to come out with earnings, so they're not viable candidates either. So this is always the week where I have the fewest stocks in my watch list, just because it's smack dab in the middle of earnings season. And this is about the time I'm tired of earnings season. I'm having a lot of fun until this time hits. Then I'm ready for it to end.
And we're right about the Apex. I believe it was yesterday or Wednesday. I think it was yesterday was when the most companies had released at one single point in time. So we are starting to taper off. I see it kind of as a lopsided mountain, that one side just sharply goes up and then it kind of fades off towards the end as other companies.
It's all downhill from here.
That's right.
The next Friday, Frank Day, we will be definitely on the tail end. We got a big week though.
Well, I think earnings is a fun time for, market and action. Plus, I think we've seen enough positive earnings results that it probably lends itself to a breakout. A couple of the big fish still need to report, but across the board, they look pretty good.
Which big fish we still wait on?
We got Apple, we got Google, Apple. Facebook. Oh, we got next week.
Here's one for you if you haven't looked at it. Check out Google's chart. This one.
This is why you get mad at earnings season as a directional trader.
Because all you want to do is buy this breakout, but earnings is right there. But when you look at this history, like this is a break. And if you bring in like a weekly chart, it's like right there at the all-time highs. Like it's like, come on, Google's going up.
That's a nice. There's a cup and handle inside a cup and handle inside a cup and handle.
This is what we call the Matryoshka dolls of chart patterns.
Yeah, I was going to say, it's the Russian dolls of cup and handles. So this thing definitely is looking
it's very intriguing. It's got that earnings right there. And I'm not sure, this might be something you could build. You build like a inverted butterfly or something on. You wait till post earnings. And I think you might be able to just do something simple like a debit trade.
So that makes sense. Let's see. I'm going to pull back up the heat map. I was just telling you guys that I love to use. And let's see what we have still to report. Everything that's in pink still needs to report. Yeah, Exxon, CVX, Apple, Facebook, AT&T, Brookshire. That's your Warren Buffett there. Pfizer, Merck, Abbott. Yeah, we got a lot still.
It's a lot. Next week's the really heavy on the names. Apple, Google, Facebook.
Y'all freeze.
You froze again. If you didn't get a chance to get a picture of Cody's, you missed it. So
dang it. Okay.
But Exxon,
sure. It happens every once in a while that it'll just come out and do a.
Yeah, it's the wonders of technology. It's just magic to me. So yeah, it's gonna be a fun one. Exxon, Chevron, so the big energies, Merck going on, Starbucks, one of our so strong for so long, and now has been a pretty good bearish candidate these last month and a half reporting. So Tim's favorite GE to report, so I know he'll be
Starbucks is waiting for the winter season to come around and see if those sales increase and those lattes and.
I don't know if pumpkin spice lattes don't prop your stock price up. I don't know what will.
That's true though. And I can bash them, but I do love me a pumpkin spice latte. Those things are quite delicious.
They are. It's a good thing they're only around part of the year. Otherwise,
see, that would not be a problem for me. The taste of pumpkin I find not good. I don't. You
gotta go try one.
I will not eat pumpkin. Pumpkin is for carving and for mocking other people.
Speaking of pumpkin carvings, I am gonna make a proposal.
Ooh, I like it.
You guys ready for this?
I'm game.
Tackle trading pumpkin carving contest.
Oh, sweet.
Oh.
I want you to carve your pumpkin with your favorite trading theme. Could be a stock chart. Could be a candle pattern. Could be a risk graph. Something scary, perhaps, like a blown out condor. I mean, like you could put that into a pumpkin shape, light a candle underneath it, and save it for posterity. Winner gets something awesome. I'm not sure what yet.
Yeah, we'll have to come up with something
awesome.
All
right, guys, out there, if you want to partake, then
winner gets a free coaching call with me.
And then tweet.
Ooh, there you go. No, loser gets a free coaching call with me.
Hey, I'll purposely lose on that one. Then I'll be like, here's my just cut a circle out or something. Like, here's my pumpkin. I'll take a call with you, Frank.
Thanks, Cody.
No, but so guys, I like this idea. No, I'm gonna partake as well.
I am gonna go carve myself a little doji pumpkin or something like that.
So we're gonna do it on Twitter.
A pumpkin. Take a picture.
I think we do it. Post it on. We'll post it on Twitter. Post it on the Clubhouse. You can post it on any one of our social media channels.
So yeah, that works, and then we can kind of gather them up and
gather them up on Twitter. Frank will get it there. You can tweet me.
Final judging will be held on Halloween.
There you go.
I'm so excited now. Let's look at this. We can look through them. I like it. Good idea.
I like it.
Good idea, Noah. Good idea.
You could carve Fibonacci's. Just lots of little horizontal lines on your pumpkin.
It's gonna be really interesting to see who has artistic talent and who doesn't. I already know I will not be having a coaching call with Noah because I don't have 1 ounce of artistic talent, so I lose.
I like this idea. I think we're gonna run with it.
I think so. It sounds like fun.
Well, with that, I'm just going to use that as an opportunity to close up shop, guys. This has been a fantastic week. Been kind of crazy. Absolutely love having you guys out. We are going to be finishing up our individual watch list before we get to the scouting report meeting later on this week. After that, as always, we have that meeting, put those reports together this weekend for our pro members. If you want access to those scouting reports, then you have to become a pro member. But what you can do is you go down, click in the link, and get a 15-day free trial. Check out those reports and see how our students are using those reports to make good swing trades and profit in the markets. And you can do that, and you can learn to trade through tackle trading. Any last words, Noah?
Hey, have a great weekend. I hope your football team wins, unless they're playing my football team.
All right, Frank, any last thoughts?
Make sure you are double checking that calendar for earnings. There's still plenty to come. If you're not a pro member, as Cody said, get over to Tackle Trading, give us a try, see what it's all about. Join us on Twitter. We have a lot of fun over on Twitter at Tackle Trading. You'll find Noah, you'll find Cody, Matt, Tim, myself as well. So if you're not already hanging out with us on Twitter, we of course invite you to join us over there. But have a great weekend. Take a little time for yourself. Be ready for those reports. So we're ready to rock and roll on maybe a breakout on Monday, or maybe not. We'll have to wait and see.
Very well. And then lastly, if you're not to the point where you want to become pro member yet, at least subscribe to our channel so you can get all the free videos that we put out on YouTube. So click the subscribe button. It's right down in the corner. And after that, guys, we will see you next week.
Bye, guys.